Growing a small trading account through swing trading requires discipline, strategy, and careful risk management. Risk management is the key. Here are 10 steps to help you with your journey. And whenever I can, I'm going to show you how I apply these steps into my trading in my goal to be more consistent and winning trader. Before you do any endeavor, the first steps you must undertake is to learn what you're doing. Learn the skills. In swing trading, you need to understand the fundamentals of swing trading, what you're trying to achieve. Swing traders, they look for reversals in the market and track the trend between reversals in the market, tops and bottoms, and capture the trend in between. I don't use a lot of chart patterns, but I do use indicators, and my favorite three are RSI, MACD, stochastic RSI, and I'll add the TTM squeeze. To be successful, you need to educate yourself through books, online courses, videos, and build yourself your own strategy and a solid foundation. Let me show you a few examples. As I said, swing traders look for tops and bottoms and tops, and try to capture that trend in between. We're going to go to this site here, and this is a great place to learn swing trading. Don't go to this site. And I have lots of videos out there, and more than willing to help you. So don't hesitate to ask questions, make comments, and disagree. Because when you disagree, you're arguing from a point of view, and that is a great thing to do. That's how you learn. Another great place to learn is our Discord chat, and we have a free zone. And out there, I put lots of videos and lots of charts and some trade ideas. All that's free, and then we have a premium section where we give some more trade signals. These are the ones for today. Yes, 17th. This is updated at every 3 hours or every 2 hours, 3 times a day, especially in the morning and especially at the end of the day. Besides my YouTube channel, Tech Conversations does a lot of option trading with examples, and he posts nearly every day. And he's taking us. Most of his trades you can do with a small account. And I could do this all day, but another one I watch quite frequently is Invest with Henry. He's a past investment broker. I believe he's trading with a $2 million account, but his videos have a lot to do with small accounts. And I'm going to tell you, I believe he is trading with a $2 million account because Robinhood froze it one time, and he really got excited about it. And that's a sign for me that money was there. Yeah, he wasn't a happy camper. Anyway, you can learn a lot from him. He got a nice, clear speaking voice and does a lot of option trades with examples as well. So before you jump in, do some paper trading, but learn the fundamentals and watch some videos and educate yourself. While I don't recommend setting goals like I need to make $300 a day and you only have $1,000 in your account, those objectives are not realistic and you're probably not going to achieve them. But whatever trading account size you have, whether it's $1,000 or $100,000, if you made 6% per quarter, that's in 3 months, that's better than any bank in town, and that's 24% APR, which is better than Warren Buffett's doing. So set your goals that are realistic and track those goals. Let me show you how I do it. So I have an analyzer spreadsheet, and what it does is it takes the stock ticker that I'm interested in, my expected move, and I'll show you on some of my other videos how that's done, but I expected this stock to move up by 7%. And the strategies I'm using, when it expires, what's I'm expecting to make from the deal, the risk reward, and this one is not so good, but it's a bull put, and normally people try to make a third of what you get, so it's okay. And then I copy this trade over to a spreadsheet where I track it. Tracking my decisions, my initial decisions is what I do. I do not track the actual trades. My broker does a great job of that. I can get statements. I can look at my cell phone every day and know if I'm in profit or loss and whether my account is increasing or decreasing because it gives me a yield curve. So I don't need to do all that, but I do need to know am I making good decisions? So I copy that information that I have in my analyzer and also share with you. And then I have a tracker sheet with those trades and an open trade summary. And you can see that from April 1st to now, if I bought the stock based on my assumptions, I have a 182 based on my assumptions, and there was wins and losses here. And some of these losses may be a win because I may have the stock may have went up towards my target and then pulled back. And the only way this tracking sheet ends is if the stop loss is hit, if the target is hit, or if it expires. I'm trying to track my decisions to see if I'm making good decisions. So in the case of Merck, I said it's going to move 6% by June 16th. It certainly did. Based on my option strategy, I should have achieved $236, maybe south of that, maybe north of that. If I had bought the stock and made that move, $1,000 worth of stock, which would have been 9 shares, I would have made $9. Investing that same amount of money or less, I made $236. That's why I use options. But I still use a stop loss, just like you would for a stock. Nothing's different. And here with my winning trades, some of them have been hit. This is April 1st. And you can see that list is longer than the losing list. That's good. And this is my profit. If everything goes along according to this plan, I'll have $2,000 profit from April 1st. And that's about 6 weeks. I do have a margin account. And these are the new trades. So I let my broker track my profit margins. And I track my assertions and expectations, percentage of moves, to see if my decisions are correct. That's important to make good entry decisions. Set clear goals. Define your financial goals and objectives for your trading. Clear goals are important. Establish specific targets for profit, risk tolerance, and a timeline to measure your progress. Let me show you how I do it. Kind of rinky-dink. I have a little analyzer spreadsheet in Google. It's free. The date of the trade, the direction I'm taking, the ticker, United Health, my expected move, what option strategy I'll use, and reason for taking the trade. And this is what it's important, when the trade is going to end. And then I try to calculate how much I'm going to get for the trade, the max profit, my targets, and stop losses, and what I will achieve, what I really reasonably can expect to achieve once those targets are hit. And then the nice thing about having a spreadsheet is you can take and track your assumptions, and that's what I do in a tracker spreadsheet. And I copy this and move it on to another spreadsheet. Those are my assumptions, my expected move, the direction, and copied it over into a spreadsheet where I can do other forms of analysis and track my open trades or trades that are open from a certain date and what my results were, win-loss rates. These are assumptions. My actual trading is tracked by my broker. This is what I base my trade on, my initial decisions, my initial assumptions. That's what I track. I think it's important to track that. So using that analysis spreadsheet, even though it's rinky-dink, I've set some goals, profit target, stop and loss, my risk tolerance, and a timeline when the trade ends. And then I track my progress. And most importantly, I put this out in Discord. Most of it's free. Develop a trading plan. Create a comprehensive trading plan that outlines your strategies, entry and exit criteria, risk management rules, position sizing. Stick to your plan. Well, you can see I set my start losses and my targets and my expected values. And using those expected values, I'm risking $350 to make $285. I'm using a broken wing strategy, and my target price and stop loss are set. And by the way, you're risking a little more than you're making, but look at this. The max profit could be, if you hit it right, at expiration, $1,200. So, but I'm really expecting to make it somewhere in that area there if my targets are hit, the stop loss are. And once I have those stop losses set, I copy them over to a alerting spreadsheet. And this is using the cloud capabilities of Google to send me an alert over email. And once I've got that alert, I can act on it. And these are all alerts that I have received, and I've closed some of these out. EWZ has definitely been closed. And this was a profit. This was a neutral strategy. I had a Iron Condor on this, and it made a little money. It was about $40. So what I do is I close them out. I sort it with a script, clear the alerts, and then about every 15 minutes, I don't, Google will update this and send me alert via email if something has happened. And this is a script. You can find how to do this it's on YouTube, and then you just Google it. And these, I need to move the stops up, take some action. Things are happening in my direction. Targets. I'm using automation to help me stick to my plan, but I'm not sure it helps me avoid impulsive decisions. I still have some bad trading habits, as everybody does. Anyway, having alerts come to my cell phone really is helpful, so I don't have to stand there at the computer all day. Swing trading setups. Swing traders look for reversals, but there's a million different ways of taking entries and exits. You have to decide for yourself which ones work best for you. I look for trend reversals. I try to buy on pullbacks, and I look for trades that offer a favorable risk-reward ratio. I'm just going to go through one example. Well, we're looking at Johnson & Johnson, a daily time frame, and I've drawn support lines. Some people use that when it bounces off the support, they go long. Bounces off a resistance, they go short. That's one strategy you can use. Another one is the TTM. And when it goes below the zero line, and it goes above the zero line, they take a long. And that would have worked there. And that would have worked there for TTM. This is the zero lag, MACD. And this is TradingView. This is lots of indicators out there, thousands of them free. And when the MACD crosses over above the zero line, that's when I like to take a short, and that would have worked. And when it crosses below the zero line, that's when I take a long. That would have worked for a little while, probably not so good. There's deep in the money, and yes, that would have worked. And I don't like to take them when they're too close to the zero line, because that's one idea. Zero lag, TTM, this is the RSI. Lots of people use the RSI. This is the RSI. I have it set to 4. And when it's above the 70 and come back around, that's when I like to take a short. And you could say maybe here, maybe here, maybe here. Likewise, when you below the 30 and come back around here and here, you could take a long. And you use the RSI with other indicators, by the way. You just don't. I don't ever use it by itself. But when I see that it's very easy to program when it's above the 70, that's when you start taking a look. Anyway, when it came back around, that looks like it would short for a while, and that looks like it would be, and somewhere in here, and then and here, and here, and yeah, this is a long. And along, and it might have been a little while, but you had to be quick on these, but it might have been okay. I drew that wrong. I didn't hear. You got to be quick, but remember, this is days. This is 3 days worth of, so 3 up days. Maybe you can take a profit early. There's many different strategies. You got to pick one or two or three that you're comfortable. Practice it and learn it and win. TradingView has millions of them. So as far as risk reward, when I win, I try to win more than the amount that I lose. In other words, for each trade, if I win $60, I only want to lose about $40. So that's my risk reward type of thing. It's always more than what I'm going to lose. If I lose as much as I win, I need to have at least win 50% just to break even, and I need 60% to be profitable. So I have to win 6 out of 10 to be profitable with a 1-to-1. But if I have a 2-to-1, then I only have to win 4 out of 10 to be profitable. A 2-to-1. So if I win $2 and only lose $1, I only have to win 40%. And likewise, if it's a 3-to-1 win rate, 3-to-1 ratio, I can be profitable at 30%. So if you go below, which sometimes I do for credit spreads, I'll do a 1 to a 0.8. My win rate needs to be above 60 or 70 in order to, I need to win 70% of the time. But the nice thing about credit spreads is there's more ways to win. So you got to just find out a strategy that works for you, practice it, paper trade it, learn it for life. So I like the RSI, the stochastic RSI, the MACD, and the TTM. And I've learned these indicators and learned to identify trends. I love support, resistance, Fibonacci, different tools that I use and I've learned over the years and incorporated it in my trading style. And that's what you need to do with yours. Incorporate it in your own trading style. Implementing good risk management is the most important thing a trader can do. It's even more important in your entry and exits. You must protect capital. Setting stop loss orders will help, but I don't use a hard stop loss. I set alert and get notified when it hits that level, and then take a look at the trade and see what's happening. Make a decision from there. The old adage is never risk more than 2% of your account total. That way you can trade a lot and stay in the game. If you have a small account, less than $10,000, you're going to probably have to risk 2 to 5% per trade, or else some of the trades are just not viable. Risk management, most important concept you can learn. Let me show you. Back on Johnson & Johnson, daily time frame. Each bar is worth a day's worth of data. We have an MACD crossover that says, hey, go down. We have the RSI above the 70 and crossed over right there. And we have the TTM in a downward momentum swing. This is momentum. TTM is a momentum indicator. This is up, this is down, and this is nothing. So we want to take a short trade right about there based on indicators. Your indicators may be different. TradingView has these little buy and sell, and we're going to short it. And we're going to short it from here for about 45 days. Let's go. This is April 5th. We'll go to May 15th. Somewhere around there. So I used the wrong little thing. This is a long, and so I went wrong. Let's switch it out. Sorry about that. Short it here. Yeah, now we got the green here. And we'll go out to about May 17th, 15th, right around there. So there was no drawdown on this one. This was a support line. And a strategy would be to, when it hits a short support line, maybe it has a tendency to bounce and go back down. And we won. Now with this risk reward, let's go up here. If you see, the risk reward ratio is a 1, and we don't want to risk. We always want to risk less than we win. And we bring this down to 1.5. I like to do that a lot for short trades, and still, or you can go down and have a 2 to 1, or you can leave it where it was, and move your target down. Either one. But this is a nice tool, and you can do back testing like this, risking $1 to make $2. And we did it. And we did it in about 3 weeks. I like Johnson & Johnson because it has a nice, predictable swing. Risk reward. When you win, you want to win more than you lose. That way you only need to win 50% of the time. So you must practice proper position sizing. Determine the appropriate position size for each trade based on your risk tolerance. Now here's the key on this. If you have a $1,000 account, you're not going to take a trade that you're risking $900. It's just not right for the size of what your account size is. Another example is I have a larger account, and I took on 8 positions in one ticker, and it went against me. Each contract cost more than $1,500. So with that one trade, I could lose up to $10,000. And even if the count was, and that count was smaller, that was a trading account of $100,000, that's 10% of the account could be lost with one trade. That was a mistake. And I don't have good news for you. I ended up taking a loss. Don't trade too big. In that case, that trade was hard to make up. Maintain discipline. Stick to your trading plan. Avoid emotional decisions. In other words, don't try to make that $10,000 back up you just lost. Emotions like fear and greed can cloud judgment and lead to poor trading choices. Always. When you make up trades are just losers. Stay disciplined and follow your predetermined rules. Monitor and adjust your trade. Even if you're working full time, you have time to look at for a few seconds in the bathroom to look at your trades. Or when news changes, you can react. And also adjust your trading strategies as needed based on the market trends. If the market is just zooming up, you don't want to use an iron condor where you're fixed tops and bottoms, where that trade, an iron condor, is better when the market is not moving or moving within a range. You've got to decide whether the market is trending or trading. Trading means within a range. Regularly review your performance and make improvements as necessary. Let me just show you just one example. Again, this is another example. I've showed you this already. This is my alert spreadsheet, and it shows you that for the Boeing, Cisco, and this is the financial ETF, that you might have to go ahead and adjust it a little bit. And these alerts are saying, hey, take a look at this. You hit a profit target or stop loss, and then you take some action on it. This one here expires in June, and I'm hoping it'll come back around, but I'm telling you, I've had this red signal for quite some time now. It's not getting any better. PayPal was a trade that just started a few days ago, so I have to maybe let that iron itself out. And so has BJ. These are both recent trades, but Kimberly, I might have to man up on this one. Adjust your trade based on the conditions. A successful swing trader does continuous learning. It stays updated with the market news, industry trends, trading techniques. I watch videos every day. I have my free Discord, a trading community. People ask questions. I stay in the game, basically. And the more videos I produce, the better they get. But also my trading has gotten better and more rational. The more you learn, the better equipped you are to adapt to the changing market conditions and adapt to life. I think swing trading is a lot of fun. So remember, swing trading involves risk, and it's important to have realistic expectations. Always trade with money you can afford to lose, and be patient in growing a small account. But swing trading is a lot of fun. Back to Johnson & Johnson. If you can capture these swings, predict these somehow, using some indicators below, you can make a lot of money. And I guess the big conclusion is you need to be successful and consistent. You need to learn your trade. You need to learn the aspects of swing trading to become successful. That's all I've had for you. Happy trading. We'll catch you on the flip.